Hello, it's our anniversary, guys. I am your host, Shabnam Panjwani, and it is with great pleasure that I'd like to welcome you all to a very special edition of Edelweiss FinTalk podcast, India's only bite sized podcast series. We started the podcast with a simple objective. That is to dispel the myth that money management is complicated. It isn't. Over the past year and through 26 episodes, we have hosted distinguished guests who have all helped us to make sure that everyone knows that it is simple. During our anniversary special month, we have a distinguished leader from Edelweiss. It's my pleasure to welcome Nitin Jain. Nitin heads one of the largest wealth and asset management franchises in the country and is admittedly one of the topmost experts in the financial markets. His business currently handles over $30 billion worth of customer assets. And so believe me when I say he knows a thing or two about the business. As our special anniversary guest, Nitin will help us navigate the world of wealth management and the coming new year 2020. Hi Nitin, it is so wonderful to have you here today. I of course have some interesting questions and maybe some crazy questions. So I'm sure you will join us on this lovely journey. The first question coming your way. Different countries, right, are at all different stages of evolution when it comes to wealth management and handling demanding clients. How is it different in India versus US versus Europe versus Asia when it comes to the wealth expectations of, these amazing clients and customers that we have?
We have interacted with a lot of wealth managers in these countries, and one thing that I have realized is that it's very, very specific to the needs of people in those countries. So for example, just to take US, when we interact with wealth managers in US and we talk to them about their clients, they said that average age of the customer there for a wealth manager, for most of the larger guys, is around 64.
Okay.
In India, the average age of our wealth clients is 44.
Very interesting. I would never have thought of this difference.
Absolutely. Now just imagine, the kind of products, the kind of proposition, the kind of relationship manager that you need for a 64-year-old versus what you need for a 44-year-old is extremely different. You cannot copy paste what has worked well in US into India. Because these people, when I end up meeting these extremely ambitious and competent people, a lot of our clients are entrepreneurs, and I ask them about their core needs as a client. A lot of them talk about their aspiration for growth. A lot of them talk about how can we do new things. They are looking 20, 30, 40 years ahead and trying to build and create more wealth. Whereas when you go to US and talk to these clients, a lot of conversation is around protection. It's a lot about how do you manage what you have earned over the life cycle. And hence, I think the value propositions are very different and the expectations are very different.
What do you attribute this difference? Is it really just a simple demographic dividend? Are we just a younger country, or are we making wealth a little earlier?
Actually, it's very simple. We're a young country. Our average age in India of a population is 27. My suspicion is the average age in US would be around 40. Now, it's an aging population, right? And if you exclude the immigrants, my suspicion is the age might be even higher in US, right? Now, that explains part of the deal. But the second part is our per capita income is $2,000.
Correct.
The per capita in US would be 45,000. Now, it just changes everything. India actually started to grow wealth only after 1991. That's when actually democratization of opportunities in terms of wealth creation happened. And hence, I think currently the generation that has created wealth or is creating wealth is relatively young.
Very interesting that you say democratization of opportunities, and to a young audience in a seemingly VUCA kind of world, right? We currently have all the opportunities, but it's presented to us in a volatile, uncertain, complex, ambiguous manner. And hey, we're also young. In that kind of a scenario, what is that meaningful role that clients or customers are expecting their wealth teams, the wealth management teams, to play for them?
Yeah, actually, before I answer that question, I want to clarify one thing which might be useful for the listeners. People use wealth management, investment management, asset management in the same interchangeably, and I think there's a fundamental difference. It's a big difference. A wealth manager is responsible for a financial well-being of his client, whereas an asset manager or an investment manager is looking to outperform a certain benchmark and is indifferent to who his clients are. So one is like you're trying to solve a problem for a customer, one is trying to just build investment excellence. And once you understand that a wealth manager is focused on problems that his clients are facing, you'll realize that there is no one value proposition, because there are different client sets and they're struggling with different issues. And that's why it's a very customized offering. It's like a doctor who's trying to understand the pain point of the individual and trying to advise appropriately based on the diagnosis. You can't just create a medicine and say, I'll give it to everyone.
Like a pharmacist.
Like a pharmacist, right? So an asset manager, you can compare him to a pharmacist, but a wealth manager is like a doctor, he's an advisor. Now, one thing that we try and do is basically, especially in the affluent client segment, we focus a lot more on the financial habits of people. So that's why it's important to understand the difference between the wealth and the asset manager. A lot of times the mistakes are not made on the investment side. A lot of times the mistakes can be made in terms of how you are spending the money, how much you are saving. Are you thinking about your retirement? Are you thinking about your child's education, which might be happening in US, for which 3 years down the line you know that you need $500,000, but you need dollars, you don't need rupees. So you're exposed to that risk. Now these are very small things that are very specific to individuals, right? So understanding their financial habits, starting from how they save, how they spend, and how they invest, and guide them appropriately based on their specific needs, is I think what a client's expectation should be. The second equally important part, and I say this with a lot of experience, that the best wealth manager is a person who I don't have to remember much. Yeah, because it's just part of my life, which is something that I have outsourced to you, and I want you to take care of it, right? If I am a doctor, or if I am an architect, or if I am a teacher, or if I am an engineer, I want to excel in what I do, and then I go home and I want to spend time with my family. I don't want to spend my time thinking through, oh, this is what happened in the markets, is my portfolio safe, is everything okay, is my money well. So this comfort and convenience is a big part of the value proposition from a wealth manager.
That's wonderfully put, because what you're trying to say, or what you're saying very clearly, is whatever be the kind of world in which I live, right? I am going to be continuing to do and excel in that part of the world. The other part, which I don't need to know very much about or even try and understand, be it VUCA or simple, someone I trust has my well-being
Absolutely.
at heart is looking after.
Absolutely.
Okay, well, wonderfully put. So then it comes to the next point that, I think all those who are rich, and I'm completely excluding myself in this conversation, but all those who are rich and were wealthy, how does he simplify it for the wealth manager? Is it one of the things that you said, that I just take out all the pain points from your head and leave you be. Could you simplify it?
I think there's a lot that goes back to insurance. See, anything that is simple on the front end typically ends up being quite
Very
complex
complex.
in the back end,
Yeah,
because to
right.
achieve simplicity itself is a big objective. You know, but I think somewhere you said that about the rich people and the complexity. Again, I would like to twist it a little bit. Now think about it. The super rich people, of course, managing their wealth is a big task. So you have to be savvy at investments.
Correct.
But I will tell you something. Actually, that problem has been solved reasonably well, because investment excellence is actually easy to access.
Correct.
There's so many talented fund managers in India and globally that if you're not doing stupid things, you would be reasonably okay. However much you're trying to manage. In fact, if you have more money to manage, you have access to better opportunities.
Correct.
You have better quality in terms of service standards from the asset managers also. You have exclusive opportunities that will come your way. You will have pricing power sometimes.
Okay.
So in a very strange way, it's actually more complex and more critical to solve the problems for the affluent category. And I think I'm very passionate about that, because in the affluent segment, sometimes it's a very large part of their lifetime savings that they're giving to you. And just imagine if somebody has given us 2-3 crores in Mumbai, and he has saved this after 20-25 years of his life working. Now, if you do a good job of that, it has a great impact on his life. And if you do a bad job of that, it can have a very damaging impact on the life of this person and the family. So the criticality is actually exactly the opposite, especially for the affluent segment. So we have to be extremely responsible and extremely sophisticated to be able to understand his needs and to be able to deliver the value proposition that he needs to be able to achieve his dreams.
That's very well put. I don't think many of us would have seen the criticality, with regards to the quantum of wealth. And you're right. I think both mental attitude and aptitude towards wealth. Oh, very, very, very interesting, Nitin. As we are now at that stage, right? We are leaving the teens behind in 2019. Has been a volatile year. I call it a forgettable year. And we're now going to be moving into 2020. What would be your views on the economy, investments, and the market? Kal kya hoga, Nitin?
Kal kya hoga, kisko pata? Though the economy this year might not have done well, but if I look at a lot of financial indicators from a market's point of view, they've done all right, right? It's a very strange thing that the economy has been underperforming, but the equity markets have been doing reasonably well. Even the bond markets have done well. And you know one thing, which might be very surprising, for the last 7 years, our economy has not grown as fast as people would have expected, but our currency has been extremely stable.
Yes.
We are probably one of the best performing currencies in the world. So on financial markets, on one hand, you feel everything has done well, except for some pockets. Whereas on the real economy, things have not been so good. Now, as far as real economy is concerned, you have to understand why it went wrong or why things have not worked out as well. One, I think a lot of reforms over the last 3-4 years, which I believe are significantly positive from a medium to long term point of view. But any such big bang reform always creates short term friction in businesses because people are not used to it. So if when GST comes, it will take system 2 or 3 years to get adjusted. Whenever you implement it, that is what is going to happen.
Correct.
Whenever you put RERA in place, real estate players will have to adjust and it will take a lot of time. IBC will come in, a new credit culture has to be built and a lot of things will change. But in the short term, all of these measures counterintuitively are growth negative. And hence a lot of times countries where we have seen these reforms being implemented have also tried to keep a very easy monetary policy at the same time, because you can't have a lot of friction and tight liquidity at the same situation. So, but interestingly, what happened in India is that we bit the bullet and did all those big reforms, but we did not keep the liquidity easy. In fact, our real interest rates went to an all-time high.
Okay.
Absolute all-time high. Particularly, we moved from WPI to CPI, and a host of things happened. Now, my view is that our economy is coming back. I don't think there is a structural slowdown. I think it's a cyclical slowdown. There is latent demand, and as interest rates have been coming down, we think eventually demand will pick up. In fact, we might have already seen the worst. But it's not going to be a V-shaped recovery. It's probably going to be a more U-shaped recovery. Okay. It will take some time. Okay. But on the financial market side, they can be completely delinked to the economy, especially in the short to medium term duration. And hence, I am actually quite bullish on some of the markets. And one of the reasons for that being formalization of economy. A lot of unorganized players are not doing well. But what does it mean? That the organized players are actually doing quite well. So overall, the demand might not be moving, but the larger, more organized players are able to gain more market share, and hence which will reflect in the market. We are very bullish on the bonds as well. The credit spreads are still very high. The inflation has come down, real interest rates are high, and the term spread and the credit spreads are very high. So think about our Bharat bond.
Bharat bond, absolutely.
So it's, if you look at it as I see it as an alternative to a bank deposit.
Correct.
Right? So where you get post-tax probably 4.5% because of your tax rates, especially for our kind of clients. In this, you are practically getting 7% post-tax, 7.7, 7.8% pre-tax. Now, that is a meaningful differential.
Correct.
And I think we have to lock in these kind of yields. So I think economy will take some time, but financial markets, I'm slightly more bullish from a short to medium term point of view.
Excellent. I think this has been one absolutely, there's so many things that we've learned from you today, from wealth managers, concentrated or focusing on each individual's financial well-being, to this difference in the age of the wealth managed clients in the US at 64, India at 44. I thought that gap was amazing, and all your reasons for that. The seeming to be counterintuitive, and of course your bullish statement on where we should see 2020 heading, if not as a hockey stick, most definitely in a nice alphabetical U. Correct?
Absolutely.
Do that. What more can I say? But I think the last week of this 2019 is ending. A wonderful Merry Christmas to you, Nitin, and an absolutely stunning New Year, which we are all hoping will come true with the way he said
Thank you so much, Shabnam, and same to you.
Thank you, Nitin.
Details and investment tips expressed by the expert in the podcast are his personal views. We advise you all to check with your certified financial advisors before taking any investment decisions. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.